Yeah, what's up? It feels like I'm busting a nut when I open you up, cause your body is exposed to the midnight mist. All weak motherfuckers give my ring a kiss, cause I'm giving dirt naps, coming with them dumb ass raps to make your lungs collapse. Perhaps you never sleep, cause every time you doze, you catch blows to the motherfucking nose. Ain't seen the sun in 66 days. Let me count the ways in a fucked up maze. I never ever ever made a whole state, but I'm down with Drake like AC is down with OJ. So fuck how you living. I'm the unforgiving, psycho-driven murderer. It's organic, don't panic, I can't stand it. God damn it, schizophrenic. So fuck Charlie Manson. I snatch him out his truck, hit him with a brick, and I'm dancing.
Hey, it's Soleil in this episode 533 of the Orange Pill Investor, and today I want to talk about how to assassinate the Byzantine generals from the Byzantine generals problem that Bitcoin solved. I assume everybody's familiar with it, so I'm not going to do like a whole episode on the Byzantine generals problem. However, to sum it up real quick is when you're attacking, you want to attack in unison, and how do you communicate with all the generals and make sure that the traitors don't, spies and traitors don't screw up the attack. So we've got proof of work that makes spamming the network costly. So, that inhibits just free attacks. Like actual spam in your email is practically free. There's no cost to just spinning up as many different bots on X or, spam emails. The cost to do that is near zero. However, in Bitcoin, because of proof of work, it actually is costly. However, there's a catch. And the catch is that Bitcoin at its most simplest level is distributed data storage. And some people say, oh, well, the fees are the filter. And all we have to do is have the fees for the legitimate transactions, the financial transactions, outweigh the spam transactions. And unfortunately, if you examine that just a little bit, you realize why that doesn't make any sense, and that is impossible. Because what is the reasonable price tag for data storage that would last 1,000 years? There's no fee. Like the upper bound of that fee is infinite. It's priceless. So you can't just say, well, legitimate transactions should drown out the fees for the illegitimate transactions, because the upper limit for the illegitimate transactions is infinity. So it's almost kind of like holding Bitcoin hostage. Spam is holding Bitcoin hostage, and okay, now we pay the fee to prevent spam, or worse, CSAM, from getting on the blockchain. And then the spammers just raise the rate. It's just this constantly escalating ransom that we would be exposing ourselves to. So the fees is the filter argument holds no weight whatsoever. And let's just think about this from, I'm going to call it first principles. Although I hate when people say, let's look at this from first principles, and then they don't actually show you something from first principles. They just show you their conclusion and skip the fucking first principles part altogether. However, first principles, let's just assume that the fiat system is not trying to go away quietly, right? They like the fact that they've been able to manipulate money and extract value doing nothing, basically rent seeking, for thousands of years. And that little scheme was perfected in the early 1900s with the introduction of the central banking, right? They can just print money, collect the most of it, and let the scraps trickle to everyone else, and let them spend their deflated dollars, or try to hodl and keep treading water with their deflated dollars. So let's say that system wants to continue to operate, and Bitcoin is a threat. They're going to attack it. So let's just assume that Bitcoin is under attack at all times. And how would one legitimate attack look? Well, if Bitcoin solves the Bitcoin General's problem by having more honest generals than traders, right? You're trying to get your transaction verified. You get, verified. I'm a trader, right? You've got to have a healthy network here. So one attack vector would be to assassinate as many honest generals as possible. And that's the reason why you can kind of tell who's I don't want to make a no true Scotsman fallacy argument here, but you're going to know a true Bitcoiner or someone who is advocating for Bitcoin, because that person will want more nodes. The more nodes, the better. And so what does spam do? Spam bloats the blockchain, and it makes it more and more difficult for people to become node runners. The minimum requirements for storage is going to continue to increase. And I know storage keeps getting cheaper and cheaper. However, if you are, what is it called? When someone is starving, food deserts, they are living in, not food poverty, not food scarcity. Anyway, someone who may or may not get enough to eat, right? There are people who, let's just, when I was a kid, it was always like, eat your food because there's children in China and Africa that are starving. So let's just go with that. Let's just say that there's some node runner in Africa, and the most he can scrape together is 0.5 gig of hard drive space. At some point, he's going to get priced out. He's no longer a node runner. So bam, you've just assassinated one. And then, even though storage is getting cheaper, if it can't keep up with the bloat, you're going to continue to reduce the number of generals on the battlefield. And the more honest generals that you can assassinate, because they can't upgrade and they can't run a full node, they could downgrade to a pruned node, something like that. But you really want to have as many archival nodes as possible. And spam is a direct attack to decentralization. The more nodes, the more decentralized. The less nodes, the more centralized the network is. So I think from a first principles standpoint, clearly spam is an attack on Bitcoin. Now, whether you agree that knots was effective or ineffective, even with 20% of the network, you can still get spam through. Okay, maybe I'll concede that. Maybe knots was just virtue signaling. However, I'd rather fight the spammers with whatever tools I have available. Now we've got BIP 110, we've got the cat, and so there's going to be many more ideas and methods to fight off this attack, and hopefully we'll get even more, right? Hopefully we'll have multiple implementations, and maybe we'll get 2 or 3 really good implementations that combat spam, and we can get this figured out. But On the Bitcoin Treasury Company side, I will be plowing through something. I'm going to try. Well, I don't want to say try. What was it? Yoda said, "There's no try, do or do not." So I'm going to get a proposal, a shareholder proposal onto Strategy's meeting. I have to look and see if I have enough shares, if I've held enough Tesla shares long enough to get the vote on their next meeting. I may not be able to. But I could also try to find someone who does. So if I don't, and actually we can do this for every single Bitcoin treasury company. The requirements are you have to have 25 grand worth of their stock for 1 year. And then it's like $2,500 worth of the stock for 3 years or something like that. So I'd like to be able, I think it's probably okay to just start with Strategy and Tesla, not because they're a Bitcoin treasury company necessarily, but just because that would probably cause a newsworthy event. People would be like doing a double take, like, why the fuck does Tesla have a shareholder vote around Bitcoin spam? So for nothing more than some free advertising on this issue, I'm going to see if I can get a Tesla vote. But I may not have the proof of ownership requirements. But I would be willing to bet that if I canvass the streets, if I can't do it on my own, maybe I can partner with someone else, and I can spearhead the proposal, and the other person just puts up their proof of ownership. So I'd like to get at least Strategy on the record of, hey, we've studied this issue, and even if they say, look, we're going to go with Bitcoin Core. And for me, worst case scenario is that they would be like, yeah, we're just going to let Coinbase custodian, run a node. And if they want to upgrade to V30, like, we're not going to get in their business. That's worst case scenario for me, but at least we would be getting them on record. And then if spam does get to a point where it hurts Bitcoin's use case and the value suffers, or some CSAM gets onto the blockchain, and we gotta start suing motherfuckers, then they will have at least had a chance to, put themselves on record that this is why we made these decisions. And if they're not siding with the Knots Bit 110 crowd, and they're like, yeah, sure, fuck it, let's blow open the op return filters, and something disgusting gets on the blockchain because of it, then maybe those Bitcoin treasury companies can fuck around and find out in court. So is that manipulative on my part? Absolutely. I'm not going to duck it. All of life is manipulation. From the moment that you were born and cried out for the first time to get fed or hugged or whatever mommy and daddy issues you had. All right, that's all I got to say about that. Let's keep it moving. What's up, Voyager? Saad says, why are pruned knowns bad? If the prune is based on cryptography and the proof of work is based on cryptography and verifiable, what am I missing? So I didn't mean to make it sound like pruned knowns are bad. If your storage requirements say that you can only run a prune node, okay, fine. But I think a new implementation still has to download the entire UTXO set, and then you can put it in pruned mode. So I still think when you initiate, somebody can correct me if I'm wrong, but I think even to run a pruned node, which is going to have some of the bloat trimmed out, And that's what some of the spammers will say is that, well, just run a pruned node because you don't need as much space, much hard drive space. But the archival nodes have everything. And given the option, the archival node is always going to be better. So I don't want to discourage anyone. Like, hey, if you just want to run a pruned node, running a pruned node is absolutely better than not. And, you could still use it to, make your own transactions and make sure that your Bitcoin is your Bitcoin and you're taking part in the system in that way. But a pruned node cannot be used for someone else who wants to do a brand new implementation, right? You have to have the entire set of code in order for a new implementation to download everything, and then you can move to pruned. So like if everybody ran a pruned node and there wasn't one single archival node out there, then no one else, as far as I know, no one else would even be able to run Bitcoin because you wouldn't be able to download all of the transactions. So yeah, run a pruned node if it's if running an archival one is taxing or you just don't have the bandwidth for it. Sure, fine. But we want as many archival nodes as possible. So Buffalo, yes, a pruned node downloads the whole chain first. Yeah. Thanks for that. If you're pruned at 5 gigs, the old data beyond 5 is deleted as new data comes in. Okay. I need to study that a little bit more, what the pros and cons of the pruned nodes are. But regardless, I think this argument still holds that we want people to be able to run as many nodes as possible with the least amount of bloat as possible. And there's really an infinite bid for spam. Like no matter how expensive it gets, it's still dirt cheap to think that someone is going to store your data for 1,000 years. So it's kind of ridiculous to think that the filters will actually fix this problem. Thanks for education. Still an interesting topic. Appreciate it. All right, so keeping it moving. Let's filter this. Tesla, man, I was getting so paranoid with my margin use that I was like, okay, I'm just gonna spam the premium and try to chip away at this. But I have been limiting my upside on Tesla like crazy. I'm still not too worried about it until Tesla breaches its all-time highs, which is around 500. Here's my chart. So once we get over 500 and stay there, did we briefly hit 500? No. Then we're going to get into price discovery, and I would feel very nervous about selling these like aggressive weeklies. I've already been trading suboptimally, but I'm not like terrified of Tesla running until it clears 500 and stays there. At that point, like all bets are off. Who knows where it'll go? But for now, I'm not trading optimally, but I'm not like super afraid of it running. With all the QE that's coming in the next year, I have no reason to think that it won't just run like crazy. But who knows? Prices can do whatever they want. So, I'll probably have to trim something to pay for this because I don't want my margin. I don't want my margin use going up just because I'm picking terrible strikes here. But anyway, Cypher's been on for 14 days, but it's still got plenty of extrinsic value. It's actually got more extrinsic value now than it did when I sold it 2 weeks ago, because the price has been going against me. But it's going to be no big deal to let this cook for another 7 to 10 days. So I'll just sit on that one. All of the rest of these, I just have one share in case CSAM gets on the blockchain. I want to be able to participate in a class action lawsuit against 21, DJT, Hut, Riot, Bullshizzle. Is this Cantor? Is this the other Cantor? I can't remember what CPO is. All right, strategy. Strategy is kind of in a similar situation. You would think like even if I think this is the bottom, like why am I selling these very aggressive calls? And there's nothing like too terribly scientific about this. But even though I think 2026 will be better than 2025, I don't know that this just is like people are expecting a parabolic move like any day. I mean, some people were still calling for 400K Bitcoin by New Year's. I think some of those mega bull calls are kind of ridiculous. Not that it can't happen, but I don't know. Just to the end of the year, I just kind of feel like people are probably tax loss harvesting. Like all the people who have cost basis of $350 or 400 can trim their position in December and maybe reduce their tax burden for the year. And I could be completely wrong about this, but I'm guessing there's going to be time to stack your strategy at cheap prices. I don't know, at least for the next month. There's, who did I watch? So Lynn Alden had an interview, and she was talking about a gradual print. If we get a gradual print, that would be kind of perfect for selling covered calls 20% out of the money and just kind of rolling and rolling and rolling. So that would be kind of nice for my strategy. If we get the Larry Lepard big print, that kind of is worst case scenario for covered calls because you're going to like make money. Shit, a ton of shares get called away. You miss out on a bunch of upside. At some point, I think there will be some FOMO and some euphoria in 2026. And I've had to kind of like collect my thoughts again because my basic assumption at the beginning of 2025 is that the 4-year cycle would hold, and it didn't. So what does that mean? It means we either had a 3-year cycle that topped at the end of 2024. And if that's the case, then we've been in a bear market for a year. And if the bear markets usually last about a year and a half, then we've probably been through most of it. Maybe another 6 months of pain before the next bull market starts. But yeah, I mean, the QE's got to kick in at some point. So if QE kicks in over the next, I don't know, 3 to 6 months, that's like perfect timing for the elections. So if they're going to manipulate the market and pump it, so that kind of like, it just seems like there's multiple things converging for a good 2026. And so we either had an abbreviated bull that lasted 3 years, or we get an extended bull that lasts, whatever, 5 years or more. And in either of those cases, we've either weathered the shitty part of the bull market or we've weathered most of the bear market already. So there's kind of like, I don't know, there's no reason for me to not call this the bottom, even though it could get worse before it gets better. But as long as I don't position myself to the point where I could get liquidated on some, if Bitcoin crashes to, let's just say 50% on a all-time high. So if Bitcoin crashes to 60, what would strategy crash to? Maybe 90? I'm sure there would be some pretty heavy bids at 100. 100 is a psychological number. It's a nice round even number. So there could be a metric fuck ton of like limit buy orders at $100 a share. But if it briefly dipped below 100, like that wouldn't surprise me. If Bitcoin flash crashed, like if we don't hold on to 85, a flash crash to frickin' 70 is kind of easy peasy. So as long as I'm like not over leveraged to the point where this margin screws me on a move that size, I guess I'm okay. So that's kind of where I landed on. It's like, okay, we either had an abbreviated cycle that lasted 3 years and the bear market's probably almost over with, or this has just been like a lull in the action of an extended 5-year cycle, and this is where all the gains are going to be made. And people who got out in November 2024 and are waiting to get back in like mid to late 2026 might time this thing. All right. So the poor man's covered call that I just put on, I mean, it's only been on 2 days, nothing to do there. I added some of these cash secured puts because the price was down. That's the perfect time to run a cash secured put. But I also ran it like 10, 20% out of the money. But this one has actually been in the money a couple of times. It's been below 160. So I might just be hodling on to these and trying to roll them out every so often as well. And I went ahead and cleared out all of my March longs. I had some, I can't remember if they were 1080s or 960s or whatever the hell, 910s maybe. And I had a bunch of poor man's covered calls. I cleaned those all up and kind of recalibrated from there. So I really don't have much of anything. Yeah, the oldest stuff that I have has been on for 43 days. I don't have any of those. Those poor man's covered call leaps that I've been trading, that have been trading against me all fucking year. Yeah, there's going to be, I think this is going to be the last true north potentially of the year. We'll take a holiday break. Don't tell anybody, but the lineup is, I think, is going to be Jeff, Ben, Dan, and Mason. So I will be with y'all in the audience. We'll chop it up in the comments. Buffalo Tesla all-time highs this morning. I've been following because my buddy is a newly ex-Tesla engineer. No shit. Been guiding him on selling covered calls against his shares. Started November 21st. Try by fire. Yeah, I would be tempted. I'm going to be tempted to stop selling covered calls if we can put 500 in the rearview mirror, because this shit could run. Let's just see. when it runs, how far does it go? So people were panic selling in mid 2024, right? Tesla was down to 138. I think it actually hit 115 at one point. I think I even had to sell some around 125 because, again, because of my margin use. And I was like, if this crashes to 75 a share, I do not want to fuck around and get a margin call. But I held on to as many shares as I could. And so it bottomed at 140, recovered, retraced. And so from bottoming out again at 180 before it went vertical, then is that a triple? 170 times we got 500. Yeah, basically almost tripled from here. It definitely tripled from here. But we'll say that this run from August of 2024 to December 2024, so that's what, a triple in 6 months. And I'm just going to call attention to this little spot right here. So I'm not a chart guy, but if anybody's as big of a fan of Matthew Cratter's channel, Bitcoin University, as I am, may actually remember that his channel used to be called Trader University. He was a big time stock trader, options. I even read his free book you can get. He's got, I don't know, a dozen free books you can get. And I read his covered call selling ones. I think he's got one called Little Black Book of Secrets or something. I read a couple. Anyway, I mean, it's pretty good stuff. Some of it's a little older, but the principles still hold up. But he's got a YouTube video called When to Buy a Stock Exactly. And the example is kind of like, okay, you've got this correction, right? You've got a sell-off, and then you've got a bottom, and then you've got higher highs and higher lows. And then that, the time to buy was like right after a consolidation and then a gap up. So I don't know if this was an earnings call or what this was that caused this, but this was the buy signal, is this gap up. Now you're going to miss 160 to 210 because you'd buy here, but you're going to get all of the appreciation from 210 to 270, right? Now, this wasn't the real rally though. So now we've got another sell-off, a correction, and then we're building higher highs and higher lows, higher highs, higher lows. And then what he described was some kind of like horizontal consolidation where institutional buyers are accumulating. And I really don't see that here. So this isn't like a perfect example, but we do have the higher highs and the higher lows. And then bam, we've got this gap up. So I don't know if this is an announcement. I don't know if this is related to robotaxis or, a Fed pivot or, actually this is November. This is the fucking election. So everybody got the red sweep pump here. That's probably what this is. But again, you've got this gap up and you're like, oh, well, shit, it's 310. I should be taking profits here. Well, no. Yes, you're supposed to buy low, sell high, but that's only related to where it's going. So you can be buying all-time highs as long as it doubles from there. You're still buying low. But yeah, so you'd have missed out on 170 to 305, but if you bought here, you could ride that all the way up, basically another 50%. From 300 to 500. The video didn't really say when to take profits, so I don't know how you would know to sell here. And unfortunately, if you didn't take profits, you'd be buying at 350, and then if you just hodled, you'd end up being down. Of course, now you'd be fine. You'd be back up 50% again. So as long as your time horizon's not fucking 2 weeks instead of 2 years, probably okay. But this actually this looks a lot more like the video, the way they described it. So we had a correction here. We've got this gradual, higher highs and higher lows. I don't know if this is much of a consolidation right here. Not really. But we do have a gap up here. So is this the buy signal? And I should have been buying at 400, and now I can just hodl and wait for price discovery. But yeah, I'm kind of excited to see if we make the all-time highs the floor. If we can do that, then price discovery is like on the table. So that would be kind of nice. But you said we actually hit them? We hit all times this morning? What was Tesla today? Okay, 480. Okay, yeah, so it looks like the high, I don't know, let's say that the high on December 18th was 488. Did we go up over 488 today? Let's see, today is the 17th. Oh shit, we did, 495. Nice. So yeah, there's this weird psychology, it seems like with the market too. Like when this gets, like when stocks get to whole numbers, they tend to like to get to the next round number. So if I was watching this when we hit 490, why isn't this showing? I don't know. Robinhood's charts are not like super granular. Why does it say we're down 4% today? Oh, because we were up. Oh, okay. So we hit all-time highs in after-hours trading. Fuck that. As soon as the market opened, it fucking dumped. What a pain in the ass. Okay. Maybe my covered calls will be safe after all. That would be funny. Yeah. Should be a good show. Mason's my brotherly Jeff Booth disciple. So I'm glad after I'm long gone, he'll be able to carry the mantle. Buffalo said sold the 10 Delta, so he is still out of the money. Okay, nice. So you're definitely accounting for some upside. I love that. I kind of painted myself into a corner, unfortunately, with my margin use. And kind of kicking myself for that, because if I hadn't been using margin, I would be loading up right now on positions. But them's the breaks. All right, so nothing really to do here, but just sit and wait, see what happens to Tesla over the next couple of weeks. This is a cash account. You can't use margin in an IRA, so don't really have to worry about taking positions that are margin efficient. But I went ahead and sold a couple of covered calls here. And you can see that my cost basis is $18.79, and I'm selling the 1550s. This means that I am putting myself at risk for selling these shares $3 below my cost basis. Tasty doesn't really calculate my true cost basis, so I've been selling covered calls on these probably for a couple of weeks. Well, when was Cypher at 18? So at least since about December 12th. So maybe only a week. I might have bought these shares a week ago. But I would have sold the covered calls on them, so maybe probably collected $1 or something. So my true cost basis is probably somewhere around 18, not 18.79. And then I've sold another covered call and dropped my cost basis from 18 to probably 17.50. So if I do get called away at 15.50, I would really only lose $200 on this. But it's all about the probabilities. I literally just don't care on these mining stocks. I try not to fall in love with tickers, but I have failed miserably with strategy in Tesla. But, these mining stocks, I can bet on some over others, but usually these are just premium generation vehicles. And also, it makes it nice for these videos because not everybody can afford 100 shares of Tesla. And it's nice to be able to see what kind of premiums you can capture with like a 5K account, shit like that. So if I have to peel off these positions in order to pay to roll Tesla to make sure my Tesla shares don't get called away, then I will absolutely do that. And it really doesn't bother me that I'm putting myself at risk for losing money here. You know, some people look at that and they're like, yeah, but you're putting yourself at risk for losing money. I'm like, yeah, you do that every single time you place a trade. You know, if you buy 100 shares of something, even if you don't sell a covered call against it, that company could file for bankruptcy tomorrow and you lose 100% of your investment. So it's a numbers game, right? If I'm taking a coin flip on this and there's a 50% chance that this goes to $20 a share, I just have to be collecting enough of a premium to make that worth my while. But maybe there's only a 30% chance that this happens. That means, 2 out of 3 weeks I get away with it. And that would lower my cost basis to 17 a share, or maybe 16.50 a share or something. And by then maybe I can sell the 16.50 strike and break even on the share price and pocket all the premiums. So in the long run, I think this all comes out in the wash and doesn't really bother me. Same situation here. This one is really bad. Iron really taking a dump. And so my cost basis officially is 47. It's probably 45 or less, maybe 44. So again, I'm taking a huge risk selling well below my cost basis. But the alternative is, either bag holding and not selling covered calls and collecting no premium and not reducing my cost basis. Or, if I wanted to roll out to the 45 strike, I could absolutely do that. Going out to 45 days. So and some people will say that too in comments on X, like, oh, what happens if the price of your stock drops? Okay, well, you can just roll out. I can easily roll and sell at the 47 strike and collect $130, which is still not bad. I think a rough estimate for a reasonable profit would be somewhere between 1/4 and 1/6 of this amount per week. So let's just divide this by 5. That's going to be like $26 a week, right? If I collected 1% of this price, that would be $35 a week. So 26 is like, what, 2/3% a week. Still averages out to a 17% return for the year, even if iron finishes at $35 a share in 12 months. You could still make 17% returns. If the price does come back up to 47, then I capture the premium and I get my original trade value back. So everything is a trade-off. I've talked in the past about trying to get your account portfolio large enough so that it reaches critical mass. And what I mean by that is, if I sell a covered call, let's just say let's do the weeklies. I sold this covered call for $50. The price of Cypher at that time was probably, it was about 15. So this is between 3 and 4% return on capital for a week, which is freaking amazing, right? If you get 3% a week for 50 weeks, it's 150% returns for the year. I'm not saying that this is sustainable forever, but these Bitcoin companies do tend to inherit high premiums because it's based on Bitcoin and Bitcoin's volatility is high. So I'm, not financial advice, and I cannot promise you that these lucrative premiums will continue into perpetuity, but I'm kind of betting on it myself personally because of Bitcoin's volatility. But 3% a week, that's additive. If you take the 3% profits that you made and you bought another 100 shares of something and then get another 1, 2, 3%. Now this is like compound interest. Collecting $100, $50 on 2 positions isn't going to be enough to get you to buy another 100 shares of something unless it's like ASST that's trading under $1 now, sadly. But that's what I'm saying is, you want to grow this account to the point where, let's just say it's worth 100 grand and you sell a bunch of covered calls, whatever, the 10 to 20, the 30 deltas, really doesn't matter. But let's say that you collect $1,000 off of that. 1% of 100 grand is $1,000, right? If you can find another stock that costs $10 a share, well, now you can sell a $10 cash secured put because you can put that $1,000 up. Or you can buy 100 shares, cost you $1,000. Now you can sell another covered call, collect another $10. So now you've turned an additive return into an exponential compound interest type return. So what do you do when you've collected $100 or 200 or 300, 400, and you're like, you know what? In order to put another position on Cypher, I need $1,500. Well, what I've decided to do is stash my dry powder in something like a Stretch or a SATA. I went ahead and chose SATA because it seems to be on sale right now. Like Stretch, I think, is $97 a share. Yeah. So, this has room to grow, like 2-3% before Strategy is going to start hammering the ATM at $100. And I figured if Jeff and Ben can fucking pump this thing, and I don't know what they're gonna have to pump the interest rate up to get this share price up to 100 when they can start, so they can start ATM in it. But if they do, get this pumped to $100, then I will have made like 9% returns on my dry powder plus the dividends if I hold this for a month. It's only like 1% dividends for a month, but still. If that happens, it's, kind of like free money. But if I collect enough dry powder that I ended up with, like 16, 17 shares, then I can just sell them all. And now I've got the $1,500 I need to take another position here, and I can turn around and generate more premium. So that's kind of my strategy for holding some of these, for lack of a better term, stable coins. I'm kind of on the fence of what to do with these 16 shares of Strategy. I kind of feel like I should be turning them into some kind of leveraged play, but it's just not enough. I've got the $900 I can use here to combine with like another lot, like $2,000 or something. And I need about $6,500 for a poor man's covered call. Unless I wanted to do something extremely risky and just, I could make some really wide ass debit call spread or something. Like maybe like a $50 wide debit spread. That would be kind of weird. Let's see what that would look like. So let's go like 30% out of the money would be about $50. So let's go to 210. Let's do 210. 200 to, let's see, I buy the 200 and sell the oh, I already have a spread at 250. So that's unfortunate. But anyway, what would that look like? Max profit would be about 1,000, and I'd only have to shell out about 1,100. So the potential to do a 4x return on this It's not terrible. Kind of cool that it's actually within the expected move, too. It only has to outperform slightly for this to hit. I'll keep that in mind. We'll see. I already have this debit spread here, but this one's only $10 wide. So, what did I spend on this one? Like $300? Yeah, I spent a couple $100 on this one for the potential to win like 750 maybe. All right, let's keep it moving. So this is my allowance. This one's even a little bit weirder because this one's a margin, and like this account is not worth very much whatsoever. So I'm kind of like, even though it says I have positive cash, I'm actually using margin here in a sneaky way, but it doesn't look like I'm paying margin interest. Oh, sorry, was that the wrong account? Yeah. So it says I've got $600 here, but I actually do not. And like, I don't even know, I could look and see what this account is worth. But if all of these got exercised, I don't think I have enough to cover in this account. So technically, there should be some margin use here. But whatever the algorithm is, Tasty Trade is not counting all of this against me. It's very capital efficient. It hasn't worked out in the short term because you can see I sold it for 160 and it's worth 310. So if I wanted to try to close this or roll it now, it wouldn't work out so well. But so I placed these positions and it didn't really even deduct any of my buying power. So I'm like, all right, screw it. I'll just buy 25 shares of SATA. Hopefully the price goes up, or if nothing else, I'll just collect some interest on it, some dividend payments on it. And it wasn't even costing me any margin interest. So I didn't even really have to arb it between SATA's interest rate and the margin interest because it just didn't count against me because of the capital efficiency on these cash secured puts. So, don't be fooled. I am using margin, but somehow the Tasty Trade is not really counting this against me and deducting this from my buying power to the point where I actually owe margin interest on it. So you might be able to find some sneaky ways to do things like this, but don't fool yourself. If Cypher stays below 17 or 13 and I don't roll these out for a credit, I would absolutely be on the hook probably for a margin call, because once I take assignment of the shares, they're going to want their money. They're called cash secured puts for a reason. You're supposed to put up the cash as collateral in case you have to shell out the monies. All right, moving on to the challenge account. I keep telling myself I'm going to fill out the form to move all these positions over to the other account so I don't have to freaking keep track of two different accounts at once. But I keep procrastinating. Same situation here, getting wrecked on these covered calls on Tesla, which is better than the price going in the other direction. Like, Tesla's the only thing I got going for me at this point. Let's see. Same here. Sold the covered calls. Plenty of premium to collect based on the share price for 2.5 trading days. Same situation here. It's saying I've got $176 worth of buying power, but it's probably like $3,000 less than that for sure, at least. But yeah, same. Selling some cash secured puts, and it's not really counting. Wait, these are the covered calls right here. Selling these cash secured puts, and it's really not counting this buying power against me. So I kind of have to keep mental track of that on my own. Strategy, same. I've been pretty aggressive selling. I think these were in the money yesterday. And we pumped to like 178 or something. So we'll see if I get screwed on these or not. Went ahead. I think I collected, I don't know, between Tesla and some of these other positions, I think I collected maybe $1,000 worth of premium and decided I would get right back on my bullshit. And I started stacking the December of next year, December 2026 1080s. So back on my bullshit with the 1080 nonsense. And I'm just going to have to make sure, like every one of these that I add is going to net, like, I think this is total. So every one of these that I add is going to add like 2 to 3 negative theta. And I just have to make sure that my net theta remains decisively positive. I let myself kind of get caught slipping last year. A little too much FOMO for my own good. Performance covered call. This has only been on for 2 days, so nothing really to do here. Let's check out the 5K account. We're still above 5K, hopefully. Thank God. Same situation here. I did not take profits in November like I should have. Okay, once this gets done thinking. Is this November? Yeah. This would have been an amazing time to just take a shitload of profits. So I'm trying not to make that mistake again. But as far as positions, don't have to deal with this until Friday. Cypher and Wolf don't have to deal with for a few weeks. The IBIT call, I think I just rolled it. So there shouldn't be anything to do there. I did put on one Tesla credit spread, which was doing pretty good yesterday. I think I rolled it yesterday, didn't I? Yeah. So I rolled this up and took some profits. And then, of course, Tesla's having a correction right now. So hopefully I don't have to sweat this one out too much. This thing will just die worthless, I'm assuming. The IBIT performance covered call. And then I decided to try to add some leverage here. I don't really like strategy spreads too much. The bid-ask spreads are kind of bad. Like you can see if I want to close this right now, the bid-ask spread is between 50 cents and 230. There's too large of a gap between the bids and the asks. But I kind of couldn't help myself. But give myself a little bit of exposure. $5 wide call, maximum profit is $500, but I paid $137, so max profit is $363. That's what, double or triple potential here if we're trading above 200 in June. That's a long wait, but I'm not necessarily calling the bottom, but it's a hell of a lot better entry price at sub 200s than buying the 1080s was in November and December. So yeah, nothing really to do here. Don't think I have any buying power to speak of. No, $124. I suppose I could buy another share of SATA. So 124 plus this 360 is almost 500. Yeah. I could almost put on another spread, I suppose. If Tesla crashes another $20 a share, maybe I'll rearrange some things and try to sell a credit spread on Tesla. All right, we're all caught up on the chats, and that is it for the day. Appreciate everybody for tuning in, and stay tuned. Lots of good stuff to come around spam. I think I'm optimistic. I think that this will be a self-healing event, and either BIP 110 or the cat or some combination of both, or some new good idea is going to come out, and I think we're going to be able to rug the spammers and drive them away from Bitcoin in a meaningful way. So looking forward to that.